Yo, 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 what's up, guys? So far, we have about 30 viewers on the call. I'm going to wait about 5 more minutes. Get your people, get your teams. We're going to start here in a second. So I'm just going to wait just a few more minutes just so we get everybody on board. So just go ahead right now and tag all your teams because what I'm about to go over is super, super important. Yo, yo, what's up, guys? All right, so I'm about to go over a lot of things, and I really guys want you to get a pen and paper. So if you guys got any more people, get your team on board. Right now we have about 35 viewers, so I'm gonna start getting into it. So let me just pause the music, and we can begin. All right. All right, guys, for those of you who don't know me, my name is Laith Samara. I've actually been trading for about 8 months now. A little bit about myself. I actually used to do penny stocks before I learned how to trade Forex. And it was a pretty great experience. Like, I was young and ambitious. I wanted to learn how to trade. And I knew that this was going to be a skill set that I could make a lot of money off of. Obviously, you can see a bunch of successful people who trade stocks and trade Forex. So I was like, you know what, let me try it out. So I used to do penny stocks back when I was in high school, but long story short, I didn't have enough capital to continue trading. So that was kind of like a bust. Can't really make money when you don't have a lot of capital. So, that was kind of how I started off into the trading industry. And then I was introduced to Forex. So for those of you who don't know, Forex is a $5.3 trillion a day industry. It's the most volatile and liquid market in the world. So, I mean, it's pretty big. Stock market is a $22 billion a day. So you guys can understand the opportunity is there. There's a lot of things, there's a lot of misconception to the actual, there's a lot of misconception to the, to Forex trading. And I'm going to tell you guys what most teachers and mentors will not tell you. And they tell you it for a reason. Most educators, schools, you know, institutions, they don't want you to know these things because that would be, they would be damaging themselves. So if you guys have any questions, you guys can ask me in the questions, and I can see it on my screen, and I'll try to answer all of them. Okay. But I'm pretty much going to be I'm not going to really be going over Forex basics, but really over psychology. So for those of you who don't know, Forex trading is 80% mental, 20% skill. Guys, they don't say that for no reason. And a lot of people think that, oh, well, once you learn how to trade, you could be a successful trader, and that's really not the case. You know, when I first came into the industry, I was able to turn $200 into $22,000 in under a month. You know, it's not practical, but it's possible, right? It's the most liquid market. So you guys can do a lot of, you know, there's a lot of things that you guys can do to learn how to trade. But it's more than just learning how to trade, guys. The things that they don't want to tell you is not everybody wins in Forex. Like, I don't know who told you that it's a get rich quick scheme or it's something that you can like learn overnight. That's not true. And what I plan on doing with you guys and the teams and Kaizen and what we're, you know, the projects that we're doing is I plan to inform, and I also plan to educate, because education is very key, but that's not where it ends. You guys have to put practice and practice and practice. You know, they say an expert at something needs at least 10,000 hours. That's almost a year of practice, you know? So don't expect to be a Forex success overnight. It is possible, yes. Practical, no. So, you know, I've been trading for, like I said, 8 months. In the markets, I profited about $40,000 in total. I was able to buy my dream car. You know, it changed my life as far as a whole. Like, I don't work a job. I haven't worked a job since I started trading. And, you know, I'll never go back to that. You know, learning a skill set like this to be able to make money off your phone or computer is great. And if you can really understand the concept and grasp it, you guys can change your life too. And that's what we plan on doing here. So the one thing that I want you guys to take from this is really understand the psychological side. Like, I'm going to go over some Forex. I'm going to show you my chart. I'm going to kind of show you things that the institution will tell you. So there's these things called retail traders and institutional traders. Okay, we are the retail traders. All right, and the retail traders, not a lot of them make money. If you look at the statistics, 90% of people lose money in Forex. And you guys got to think about it like this: it's literally you versus them. Really take that and keep that phrase with you for the rest of your life that you trade. You versus them. That's why you see a bunch of millionaires and billionaires who trade Forex, and you see a lot of losers. If everybody was making money in Forex, that doesn't make any sense. Then if everyone was happy, all willy-nilly making money, then there would be no millionaires or billionaires. And that is the sad truth. And that is something that Forex institutions and education, they do not tell you that. All right. Now, back to yeah, Justin, take notes, guys. This is super key because, you know, I could show you how to trade. You know, I could teach my little sister how to trade for, you know, it's not hard, all right? But I'm going to really tell you guys what they don't want you to know. And I'm going to tell you that Forex education is a scam. Yo, hey, like, I mean, for real, like, not Forex education is a scam. And let me explain to you why I say that. And don't be like, oh, shit, Lady just told us it's a scam. We all need to run. No, 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 no. I'm going to explain to you guys what I mean by that. Most people, all right, when they come into the Forex market, they go to what? They go to YouTube. They get mentored. Well, actually, if they don't get a mentor, that's when they really play themselves. Because if a mentor really is making money, then he knows how to be successful. Those are the people that you want to learn how to trade Forex from. Go find a mentor. Right, the mentor has the psychological part that you need, not the bullcrap basics of Forex, of how to mark up charts, not that stuff. All right, that stuff, think about it. That stuff, everybody is learning what to do. All right, that is something. If you went to YouTube or you went and took a course and they taught you how to use support and resistance, trend lines, you know, things like that, guys. That's what 90% of the traders are doing. And guys, I really want you to understand, there's some people, they're called market makers, all right? These people want to take your money so the big boys can make the most money. So the banks, institutions, you know, hedge funds, you know, people with a lot of money. Guys, if you don't have $1 million to $2 million to 10, 20, 30 million dollars a trade, you're squat. You're literally nothing in the market. You're like a fly to the universe, right? It's like I said, it's a $5.3 trillion a day market. Okay, so if you guys can grasp this concept, you guys will be profitable. And that is how I was able to make money, because I don't trade with the 90%ers. If you want to trade with the 90%ers, good luck. Good luck making money, all right? Good luck going against the market makers, because they're most likely they're going to hit your stop loss. They're going to blow your account. New people, they're going to try to go in big. If they try to location trade, guys, if you don't know what location trading is, those are the people that wait for the market to hit a certain like level, price, support, resistance, and they just get in. They're impatient, and they think that this is the perfect entry, and then little do they know, the market moves a little bit further. The market goes up a little bit more. Then what? And if you went on a big lot size, you blew your account, and you call Forex a scam. No, it's just you weren't strong enough mentally to go against the other guys. And really, in reality, you need to learn the scam to beat the scam. And when I say that, is you need to come in the markets and learn what 90% of the people are learning. Because the honest truth is, if there's nobody losing, you're not winning. Now, don't be like, no, if your friend loses money like next door to you, and you know you're making money, he's not gonna come and beat you up and say you took my money went in your account. Guys, this is on such a huge scale that it's there's nothing you can do about it. You know, it's not like you can you know, it's not like if your friend loses money and you were made money the same day, like, wow, you just took my money. No, there's someone in the other side of the world trading Forex, you know, new person, newbie, and they build their account, and then the other money goes, you know, that's how the money is moving, right? It moves from one account to another. That's, you know, that's how it works. It's how it makes sense. So if you guys can understand that grasp, you guys can come into the market with the right mindset. I do not want you guys to come in and think, oh, I learned how to draw support and resistance lines, boom, I'm going to make money. That's not how it's going to work. Because if you are trading where most other people are looking, you guys are going to lose. When do I learn how to make big money? You guys will learn how to make money once you guys know what the market is doing. Guys, I honestly don't even look at indicators as much, because I've noticed indicators are traps. If you guys know anything about indicators in the Forex market, there's things called stochastic, there's things called RSI, and you know, those kind of things, they tell you when things are overbought, oversold. Yeah, those are great, but what does that tell you, right? They tell you to sell, they tell you to buy. You know, most brokers and most institutions are looking at that, and most people are probably looking at that as well, and they're like, oh, let me sell, 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 sell. Guess what? Now there's a bunch of sell orders by a bunch of nobodies, all right? Some of them maybe got greedy. Maybe some of them did a big lot size. And then guess what? The market makers, you know what? Let's make a quick buck. We got so much money, we can push the market up, take their money, and then let it fall. Why? Why let yourself fall for traps, right? The best thing that I could tell you guys is to use Fibonacci, because guys, Fibonacci, if you guys don't know what that is, it is a retracement that is used by the universe. All right, Fibonacci is a retracement. When the market comes down and comes up, this is called a retracement. They come up to certain levels on these Fibonacci levels. And guys, these are not just applied in Forex. Fibonacci are levels like retracements, like used in the universe. Like Fibonacci levels are used everywhere. Dang, we have 81 callers on this call, guys. So I really, guys, want you to take notes. For those of you who just hopped on, you guys only retain about 30% of what you hear. So you guys really need to take notes, because if you guys think what I'm saying is dumb, like, oh, he's not sharing his chart, like this is dumb, I'm getting off, then you played yourself. Because if you don't grasp the psychological part of this, you will not be successful. And you can, good luck learning fundamentals and trading where most people are trading, and you guys are gonna, you know, you guys are gonna lose. So a lot of times people need to understand that when you come in this market, this is what I want you guys to do. I want you to come in, and I want you to learn everything. I want you to learn support and resistance. I want you to learn trend lines. I want you to learn Fibonacci. I want you to learn, you know, candle patterns, candle wicks, supply and demand zones, things like that. Because when you guys know what the market is supposed to do, you guys can cash out really big when you wait for that right time to get in. Most people are so impatient. They wait for that perfect entry and they wait for that support and resistance, and then they get in, and then the market maker, they got to make their money. They got to hit the stop losses. You guys got to wait for that to happen. All right. See, someone says 90% mindset, 10% skill. See, the mindset is super powerful, right? Guys, wait for the freaking market makers to do what they need to do on the little people, so that makes room for us to make the money. Guys, when that happens, then you can make your $1,000, $2,000, $3,000, $5,000, $10,000, $22,000 that you can make. You know, that's how you make the money. And really, guys, that's just, that's just how you make all this money, guys. Is you guys need to understand that this is a mindset game. It is you versus them. Now, let me get into my graph. I'm gonna share my screen, and I'm gonna kind of go into you guys. I'm gonna explain to you how you can see these things happen, and know the right time to get in. So let me share my screen with you guys real quick. Let's see how do I do this. All right. All right, if you guys can see my screen, can somebody comment and tell me that they can see my screen real fast? If you don't mind. Can you guys see my screen? Just want to make sure that before I go into it, make sure my screen is shared correctly. Okay. All right, cool. I got the okay. We can see it. Perfect. All right. So this is MetaTrader 4. This is one of the platforms you guys can use to learn how to trade, and use to execute orders and place your trades. Now, what you got on the left side are your pairs. Okay, you have your currency pairs that are always moving, and then you have your graph. I have a few graphs open. These are just like my strategies and what I use to look at the market. But really, when I say I don't use indicators, guys, I mean like I use them to look at it, but I don't use to rely on them. You know what I mean? Like if you guys look, most of the graphs I have open don't have indicators. They're the graph with Heikin-Nashi. I got a naked graph with these harmonic patterns forming. I got harmonic patterns forming. These are support and resistance lines. These are those are pivot points. And I have an ADX that tells me about trend and movement. I have an ADX, and I have these pivots. What I love using the most is pivot, because pivots are support and resistance lines that the market respects. So if you guys need to know some really basic stuff, the market always likes to repeat itself. Now, if I was to show you a naked graph, okay, this is the GBP in the US, GBP USD. So that means the Great Britain pound and the US dollar. You guys, for those new people that don't know, the market always respects points of resistance and support. So if you guys can see this level, you can see the market comes up, comes back down, comes up, comes back down. And like in this zone, price, this is where the sellers come in. Now you guys need to understand there are two types of people in the market. There's sellers and there's buyers, okay? And you guys need to choose whose side are you going to trade on. You guys are not going to join a seller's market and start buying. If you don't got billions of dollars, you're not doing nothing. You ain't moving the market. You're not going to win. You're going to lose. And if you can try to get in on a quick scalp retracement, like most of the time, those people end up They end up failing because they may they'll win a trade and then they do it again and they lose it. They lose more than what they made. So you know, you guys need to understand, you guys need to choose whose side do you want to trade on. And when you want to get in on the market is based on support and resistance and Fibonacci. Let's get into that. So you guys can see when the market comes up in this zone, right? The sellers like this. The sellers like this price. Guys, think of it like a banana. All right, let's say we have a banana, all right? And let's say this banana, when it gets in this level, it becomes $500. Would any of you buy a $500 banana? No. I hope you would not, unless you were really hungry. All right? You guys would not buy a $500 banana. All right? This is when price becomes expensive. Okay? How do we know it's expensive? Well, every time it comes up in this level, it keeps coming back down. There's sellers. You would sell a $500 banana. Yeah, you would. You would want to make 500. You'd sell a banana for 500 bucks. That's a freaking good deal if you had that. So that kind of concept helps you learn how to trade. So when the market comes up here, now you're like, okay, the sellers like this price. The sellers end up showing up in this area and they want to sell. So when the market comes up in this area, you want to look for a sell position. Okay. Now let's talk about the buy side. Okay. When the market comes down to this price, we got a cheap banana. We can get a banana for, you know, a penny down in this zone. And when it moves up to this zone, we can sell for $500. So think of this banana as your way of looking for entries. You guys don't want to enter when price is expensive. You don't buy when the banana is expensive. Like that's not gonna go good for you. Where do you know these level zones are? Well, that's what we will teach you. And you know with Kaizen and what I plan on doing, and like I plan on educating a bunch of people how to learn these support and resistance and supply and demand zones. Guys, this stuff, you know, this is basics Forex. You guys need to learn this stuff so you can learn how not to get scammed, guys. Because if you guys learn how to trade, you guys will learn what 95% of the people are doing. And you guys need to be careful trading with the 95% of people, all right? That's why I have this indicator right here, all right? You're looking at this white mountains of cocaine, right? I can make it blue, I can make it green, all right? But what this is called market profiling, okay? So I have my graph, right? This indicator is telling me where price was most bought and where price was the most spent at, okay? So you can see on this day, this was yesterday, this is a new day at 4 p.m. The Australian market opened, okay? This was yesterday. Where was price traded the most? And it will be right here. Look how big this volume came out. So about 106.094, okay? This is where most of the traders were trading their money, okay? This is where I would not trade. Why is that? Because the people trading here are going to be the people who are going to be losing money. Why would I be with these? Why would I want to work with these people? I mean, yeah, I could make money. Let's say if I bought, right, and it went up here, yeah, I would have made money. Psychologically speaking, though, with Wicks and the way the market moves, most people probably got in, they got out, it was consolidating, maybe they blew their account. And market makers, they can see these prices. You know, they can see the zone. You can see the zone right here where price was fluctuating. This is probably where most people lost their money. Okay, so you're like, okay, Lath, then what are you suggesting? Where should I trade? All right. What did I tell you before? I told you about Fibonacci. Okay. I told you guys about Fibonacci. Well, what is Fibonacci? I'll show you guys. All right. So this is our Fibonacci line. Okay, I'm going to erase these. All right. Fibonacci are retracements in the market, okay, that the market will like to respect. So you take it from your previous high to your previous swing low. when you mark this up, you can see the market in a really different perspective, okay? This is the Great Britain pound, Japanese yen. The two most important lines that I look at, honestly, guys, is the 38.2 and the 61.8. The 61.8 is a really, really big zone. The 61.8, when the market usually retraces, when the market drops and then it comes up, and if it's still on a continuing drop, let's say it's a downtrend, all right? There's two types of trend. There's a downtrend and an uptrend, right? It's either going up, down, or sideways. And you never want to trade when the market is going sideways. You won't make money that way. You want to make money when the market's moving up or down, okay? So in these retracements, if let's say the market is on a downtrend, most of the time the market will spike down. Eventually, it'll work its way up to either this zone or this zone, and then continue to follow its downtrend. So if I can show you guys a perfect example on Fibonacci, I could let me see what the markets are telling me. All right. Okay. So you guys can see right here that the market came up to the, it came down, came up to the 61.8 zone, right? Came up in this area. And look, the sellers showed up. All right, so from here, we had a buyers up 180 pips. Okay, this was a buyer's market, right? When I talk about who's in control of the market, you need to look out for retracements because you guys don't want to get trapped in a opposite direction. So when the market came down, came up, from starting from right here, you know, we have our uptrend, right? Let's draw, you know, we draw our trend lines. Right, our buyers are here, right? The buyers like this price, okay? When it came down, buyers showed up, you know, started retracing, and it kept bouncing on this line, bouncing. Then we start coming up to the 61.8. In this zone, you could watch out for a bunch of sellers. Now, if you guys, now it looks easy, but when the market is happening, you need that confirmation before you get in so you guys can take a trade like this, all right? So right here is a candle pattern reversal. And not only did we take this, if you would have taken this trade based on this reversal pattern on these candles, which if you guys go to my Facebook page, Late Samara, and message me in inbox, I can send you guys a candle pattern PDF chart that will show you all the different types of patterns that you should be looking out for on candle pattern reversals. So when it breaks a trend line, that is a good indication that there's going to be a huge reversal. So we had this uptrend, okay? The market faked a bunch of people out. Like, let me show you exactly what I mean by 90%ers of traders. I can teach you guys how to draw a freaking trend line, all right? Do you guys see how I can draw this trend line? You know, the market comes down. Oh, perfect. Let's buy again. Oh, perfect. Let's buy again. Perfect. Let's buy again. Buy again. Let's buy again. And then what happened here? We had our candle come up, break this, okay? Came all the way down. Guys, think of it like this. You always need to wait for that second candle to close. Most impulse buyers, most impulse traders, I'm sorry, saw this and they're like, "Oh, I need to get in at this area because this is the perfect entry for this sell." But guess what happened? It came in, all right? The market broke the trend line. When it breaks the trend line, that means that this line, they no longer respect it. So that's indicating you to get it on a sell. So what happened here? The market came down, faked a bunch of people out, dropped about 25 pips. The market dropped, enticed a bunch of sellers, and then what did the buyers do? The buyers pushed it all the way up, probably blew a bunch of accounts. A lot of people lost money, came up here, and then the buyers probably took profit, and then we had the downtrend. So guys, if you are one of these people, why do you let yourself impulsively get in? Wait for price to tell you. If you would have waited on price, you would have seen that the market closed up here above this trend line, making this still valid. Okay, Then it came down here, consolidated, and crashed, right? Now the sellers are in control, okay? About 300 pips, okay? You guys need to see that these Fibonacci levels mean something. So at this 23.6, okay, what was happening? A lot of buyers were looking at this area because what happened? It came down, then we started getting a push up. We came down, and then we got another bigger push up. So we got buyers showing up now. Guys, think of your candles as people. Guys, like, for example, when you see big moves, let's give him a face. Like, let's say this was Warren Buffett. All right, Warren Buffett has a lot of money. He probably has the power to do something like this. All right, you know, let's say this was Bill Gates. All right, like, guys, give these candles some faces, because you guys can see, you guys can look at it in a person perspective, that there's someone else on the other side, right? It's not a market. There's people, hedge funds, banks on the other side trading, okay? If you guys can really grasp this concept along with Forex education, you guys can beat the system. You guys can't be with the system. You got to beat the system, all right? The system shows you how to trade, but the system itself will make you lose. That's why I say Forex education is a scam, because guess what? Forex education told you to sell when it breaks the trend line. But what did the market do? The market faked a bunch of people out. Millions and millions of people probably sold. And then the buyers took control, took all your money, right? The people that were down here, the people who had contracts down here were like, let's get a bunch of sellers and let's buy them. And let's make more money. Let's make more money because they're greedy. Freaking greedy people want to make more money. Greedy banks, greedy institutions, all right? But the laws of physics come around to the 61.8, and then we have a retracement. The market was going on a downtrend. Okay, name of that indicator. What indicator are you talking about, Mark? What indicator are you talking about? Oh, you're talking about this? This is ADX, Average Directional Moving Index, if that answers your question, Mark. So guys, you need to understand who is in control of the markets, the buyers or the sellers. Okay. When does the transition and shift happen between buyers and sellers? Well, that can go into trading levels, Fibonacci, support and resistance, pivot points, things like that. Okay, just because it comes to those levels, don't get in. Wait. All right, wait for that move to happen. Like, for example, what happened here? We're in our 23.6 zone. Okay, the market, the buyers are showing up, kept coming up, keeps coming down. You know, it's not wanting to really go past this support. Let me change this a different color. Let me make this like blue. Let me make this a little bit thicker. All right. The market, as a trader, you would mark this up. Oh, look at this support line. Oh, by this point right here, you would have drawn a support line right here. Okay. When it breaks support, that's a good indication that it's going to continue going down. All right. So what happens? The market comes down. People are buying. Comes down again right here. Do you see how perfectly this is? This 100.233. The buyers, the sellers keep going away. No one wants it after this point. So it keeps coming up. It comes down again. And then what happens? Boom, 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 boom. Look at that. Huge wick. Huge candle on the upside, thinking, oh my God, this has gone its way to the moon. Oh my God, let me get in. Buy, 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 buy. and then comes down, crash, sell candle, boom. You guys understand what just happened right here? Before this big move, the institutions know this is happening. The institution knows that this is about to rise, that people are going to buy. They're getting ready to put millions of dollars right here. But they need your money first. They want your money. They want you to sell. All right? They want you to sell. So what happened? Market comes up, enticed a bunch of buyers, probably greedy people, went on a freaking 5.0 stand. Who knows? You don't know what people, the 900 traders around the world. I don't even know how many people are trading Forex, to be completely honest. Millions, billions, I don't even know. Regardless, a lot of people, maybe with, even people who have like tens and thousands of dollars. You got to understand, like, that's why this market is so huge. Like, imagine a bunch of people trading right here. Oh, it bounced off the Fibonacci line, the 23.6. It's a support. Like, everything is there for a basic fundamentalist trader to know to buy. But is that what the market did? Did the market comes down, breaks? Probably a lot of these people probably either got out, took the loss, were like, oh my God, what the heck? And then they're like, sell, 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 sell. And then kaboom, closed up. Wait for this to close. If I would have seen this probably happened so fast within the hour that some people were probably too impatient to wait for this hour candle close. They're probably scared this bad boy would have taken this market way down here. No one got time for that. No one wants that to happen. That is scary. It's real money. You're talking about people's money on the line. They're not going to do that. Wait. Yo. Oh, man. That was – hey, can y'all see me? No. You cannot see me. It says I'm live. Hold on, let me refresh it. There's still people on. You're back. All right. Oh, man. All right. Yo, sorry about that, guys. Had a little drop in connection. We're back on. All right. All right, so let me go back and share my screen. I'm gonna wait for everybody to get back on. Yo, guys. So, hey, I mean, what are y'all thinking about this webinar so far? I want to hear you guys' input. Is this some valuable information that's going on? You guys liking you guys want me to go over something? Anything you guys want me to go over? Yeah, my bad about the connection. The connection just went AWire on me for a minute. But yeah, guys, tell your team if the market just went up. I mean, the connection just came back, so our viewers are coming back. All right, guys. Oh, the indicator to see how many people are trading. Mark, if you're still on, that is called market profiling. And I'm going to be going over that on a separate day. Like, I'm going to be going into depth, but I can go in. I can kind of tell you about it right now. So let me go back to my screen, kind of get back into what I was doing. All right. So back to what I was saying. You know, how do we know? As I was saying, there's a strategy called Tick Tick Boom. It was made by Dimitri. And this is a really good strategy to help you with a consolidating market, to help as confluence. Guys, confluence trading is when you have multiple confirmations before you enter. So you use confluence. Never enter because of one indicator. Don't ever enter because of support. Like, that's really dumb. You're gonna lose a lot of money. You know, you're gonna lose a lot of money that way. So that kind of confluence trading will help you be a successful trader. If you got the psychological part down, you got the confluence down, you got you got Fibonacci, you got everything on your side, there is still a risk. All right, that's why there's no such thing as 100% trading, and it's literally you versus them. So Tick Tick Boom is an indicator, is a strategy that helps you understand when the market is going to do something big in consolidation. Look, this market has been going sideways. You got to fake out, and then it's going sideways again. So let's count how many bears and bulls there are. Like I said, the bulls and the bears are two types of markets. A bull candle is a green candle, and a bear candle is a red candle. So guys, think of it to remind you like this. A bullish market is up, okay? A bull has horns. The horns are what? They're pointing up, all right? Bullish market, horns, bulls, it's an upwards market. Bearish market, think of a bear standing above you, it would look down on you. Right? That's a bearish market. So that's how I remembered it. I mean, you guys can remember it your own way. But that's how I memorize it. So in this market, we have consolidation. So the way of the Tick Tick Boom trade is like, how many more bull candles are there than bearish candles? So let's count. We have 1, 2, 3, 4, 5. 5 sell candles. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 bull candles. Okay? This right here is telling me there's more buyers in this area than sellers. So that's another indication, on top of it being in the zone, on top of it being around this support and resistance, supply and demand zone. Okay? And then we have our ADX. The ADX is a trending indicator that lets you know momentum. And then, guys, boom, right here, we enter the market after this breakout candle. So even if you enter about right here, after the ADX went up and the green D positive went up, even if we entered right here, that's a nice 386 pips on a standard lot. That's $3,800. You got to tell me that Forex can't make you money? All right. This is the scam. This bull crap education, because education doesn't teach you what to do when something like this happens. You freak out when this happens. You lose money when this happens. You freaking out. And look, this blue line indicates momentum. When the momentum is above the 20 and the 25, that's indicating the market is moving. But look, the market was below. The market's dead. The market is dead, but what? The market freaked out. Guys, this is a trap. This is a trap right here. If you fell for that, I'm pretty sure millions of people fell for this. And because of millions of people fell for this, that's how the billionaires get to make this money. That's how the billionaires get to have all this. They get to have all these profits because the money was lost right before. That's psychology. That's psychology. Okay? Man. So is it better to buy when less people are trading? Yes. So back to that. If I show you guys where the people are trading, so let me go down to this. What chart was I looking at? I can't remember. I was looking at, forgot. I was looking at USD JPY. Oh, okay, perfect. It won't let me. Oh, it won't show me back where I was showing the example. But okay. So this indicator is called market profiling. Okay. So with this indicator, you can see that I have my pivot points where these are zones where the market always has support or resistance. Okay. So perfect example right here. Right here. Buyers were in control. Actually, the buyers have been in control. The buyers have been in control of this. Now we have retracements down, 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 but this has been a constant uptrend. Where it's going to reverse, we don't know. I can't give you that, but you guys can catch retracements easily because you can see that price at that day was not accepted. So this was 1, 2, 3 days ago. All right. You guys can see that the market was the biggest trading was right here. You see how high this went up? This is at this price, 105.726. But look what happened. We have my pivot point right here. And look, these little blocks, they're based off 30-minute of data. Okay? So if you divide 24 hours, you will know how many blocks of white or how many blocks of these will have. So you guys can see that that nobody was trading this price. You guys see this right here? Okay? What is price telling you right here? We are coming up to a pivot point, okay? Look where price is closing. Price is closing right at this line, right? Good support and resistance. And then look, when price reached up here, nobody wanted it. The buyers were not here. Look how small this was. This is where this is where the smart people are trading. Not where these people, not where the average Joe Schmo, all right, they see a candle wick and they start buying or selling. No. The smart people are trading right here. You guys see this? Look, nobody was the price. This is where price gets rejected. All right. Look, see, low block, price was rejected. Low block, price was rejected. Low block, price was rejected. Low block. Look, look, this is where you want to enter. Okay. You guys see that? I'm really sorry about that, guys. I don't know why my internet is being whack right now. Like they don't want you to win. They don't want you knowing these nuggets. It's the market makers, guys. They're trying to cut off my feed. They're like, what is this guy doing? Giving away our secrets. Can't have that. Okay. All right, so we're back online. I'm really sorry about that, guys. They don't want you winning. Okay, so let me go back and share my screen. All right, so these zones is where price gets rejected, and this is where you want to enter these trades. So like I said, if you would have entered this trade, you could have caught a nice 170 pips, okay? And you guys can really see, like, look, price came down here, nothing happened. Look, low volume of buyers or sellers. Price came back down again, low volume. And look, we still had this pivot point. And then look, this candle would have came in, we would have seen that price got rejected. We take an entry right here. Bam. Let's take a nice swing up on the upside for 129 pips, right? The market came up here. Let's look at what Fibonacci is telling us. Oh, wow. Guys, look at this. The price comes up, right? We entered our buy right here because of our pivot point, and our buyers are not coming in. And then maybe, let's say you had a few other indicators, whatever your trading style is. You took this buy for a nice 107 pips. And then the market likes to retrace. Guys, this is natural retracement. And look what happened. The market came down 61.8. 61.8, the market comes up and it starts being on a buy. But what happens? Market comes back down again, breaks this, and people are like, oh my God, it's a sell. Get in, get in, get in. It trapped a bunch of sellers, and then the market retraced and continued its uptrend. Honestly, if I was in this trade from here, we had this buy, I'm okay with retracements. I'm going to let it retrace. And either people got out, they took their profit, they started selling. And if I would have waited for this candle to close, you know, if I was patient enough, I could have seen that the market went right back up, closed above, and it continued on its way up. Maybe, and then I would have taken my profit at this pivot line that you see, like, it comes from boom, 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 and it goes up. Guys, if you guys want me to do like a trading strategy package, and really, like, guys, if you want some mentoring and if you guys want some serious one-on-ones, guys, like, I'm going to come out with some freaking fire. All right. And I'm not going to charge like a freaking huge amount. I'm not going to charge monthly, you know, but I'm going to make it to where it's worth your money and worth your while, because, guys, this is what the things that I know that they don't want you to know is very crucial. So, you know, just be on standby when I release my videos and my education and my my trainings, because, guys, I really want you guys to win. I really don't want you guys to be the 90%. I don't want you guys losing. You know, I don't want you to think Forex is a get-rich-quick scheme. I want you to learn the fundamentals so you can learn what 90% of the traders are doing, so you can not do what they're doing, or not get trapped with them. Because at the end of the day, the market makers and the institutions got to make their money. They gotta fake you out, right? They got to do what they need you to do so they can win. So, you know, I want you guys to learn these things so you guys can do it. So, guys, what I just showed you guys today was stuff that I don't really show people, but, you know, guys, we're about a team of winning, and, you know, I really want us to win. So if you guys have any questions for me, I can answer some of them, because I think that's you said, all right, let me go to these questions. They don't want us to win. Information overload. Hey, I appreciate that, guys. Thank you so much. I don't mind doing this, really. I mean, I just want us to win. You know, as a team, we can do a lot of stuff together. So how do you know that nobody is going to get in the trade until nobody got in the trade? Oh, well, like I said, Steven, that indicator, you guys can't just look at that indicator. You gotta look at other things. You gotta look at Fibonacci. You got to look at support and resistance and supply and demand zones and some trend lines, okay? When you look at those things, it gives you a heads up, right? It's telling you, hey, look at this. It's not telling you that it's going to do that, but it gives you the heads up like, hey, look at this area and let's see what the price does. And then we wait for confirmation. We wait for the price to do something, not what the candle is doing. You know, let's wait to see if we get some Whiskers or some Wicks, all right? Let's wait for something to happen. Let's see what the market is telling us, not what they want you to see. Guys, you got to react, all right? You don't predict the market. You react. You wait for the market to do something, and then you get in. You don't just get in on a location. You don't just, oh, it hit support, bam, let's buy. No, you wait to hit support. You watch it, see what it does, then you make the action, all right? That's what they don't want you to know. You talk about not getting faked out and waiting when it hits your support. How many candlesticks or how long do you wait to get in the trade? I would wait for the next candle, at least on the hour. So if the candle is on the support, and then I would wait at least 1 or 2 candles. All right. If you're looking for a big swing, it's okay to wait for that confirmation so you don't lose your money. So whenever you're waiting on support and resistance, you're just looking. All right. So all right. So what time frame do you draw the Fibonacci? I draw it on the hour. All right. I draw it on the hour and the 4 hour. After that, I don't really look at it. I mean, you can look at the daily. You can look at the daily, but like, you know, those you can't really catch like a quick, you know, movement like that. Like, so the hour, I'm more of an intraday trader. I'm not really a swing trader. And guys, what I show you, just because it works for me does not mean it'll work for you. All right. The thing that I've noticed is people like to follow somebody and they look and they're like, oh, well, he's making money this way. I got to, you know, this is the way I got to make it. Guys, it's all about your personality. And you got to figure out, if you're new to the industry, you got to figure out what kind of trader you are. All right. There's swing traders. There's swing traders. There's day traders. There's trend traders. There's scalpers. All right. You got to find out what kind of trader you are, all right? You got to find out what works for you. Just because it works for me doesn't mean it's going to work for you, because it's a psychological game. If you're psychologically capable of holding trades for weeks and months, then good for you. I don't think I can do that. Me personally, like I don't know if it's because I'm a Scorpio or if it's because of my personality. Like I can't deal with that kind of stress. I need to get in and get out. I'm more of a trend trader. I like to trade I'm more of an intraday trader. I like to trade within the day. Also, another thing you guys need to know is don't be staring at your charts all day. Guys, your psychological mindset will deteriorate if you are looking at charts every single day 24/7, like most people on Facebook are doing. All right, it's not cool. All right, it's not like what's cool to stare at a screen all damn day. All right, your brain is gonna go on overload. Okay, so you know you don't need to be training every single day either. There's no reason, guys. If you can make 10% a day, be done. If you can make 20% a day, be done, guys. Most professional traders don't look, oh, I'm gonna make $500 this week. If you go in the markets expecting to make money, the markets are going to bite you in the ass. All right? They're going to bite you in the ass because you're going to expect to make – if you expect the market to do something for you, that's like expecting if you expect someone to do something for you, what's that person going to say about you? They're going to be like, excuse me? Like, get the hell out of here. You know what I mean? Like, you know, and as funny as that sounds, as stupid as that sounds, that's how the market will treat you. They're like, get out. You expect me to give you a certain amount of money? Oh, well, I got to make $100. Well, like, I got to get you to lose money. That's what it's going to make you do. You're going to lose money. All right? Look for percentages. All right? If you have $100 and you profit $50, guys, that's 50% growth in a day. Guys, if you grew an account 10% every single day, you'll be a millionaire in a few months. 10% compounded you make. And so if you had $100 and you make 10 the first day, then you make 12 the next day, and then you know, and et cetera, compounded, you guys will be a millionaire. Don't be looking for the markets to expect to give you, oh, I need to make $5,000 this week. I got my bills to pay. Well, most likely with you going in the markets with that mindset, you're going to blow all your money and you're going to be worse than when you came in the markets. Guys, you know, you need to be willing to risk what you trade. Guys, don't come in the markets and expect it to pay your bills, because you're going to be so emotionally attached to that money. Guys, you got to be willing to lose all that money. If you're emotionally attached, then you're not going to think correctly, and you're psychologically not going to be capable of handling what the market's going to do to you, and you're going to probably lose your money. So what do you recommend to look at the chart time-wise? Well, I only look at bigger time frames. I look at the daily, the 4 hour, and the hour, and then I look at the 15-minute for an entry. Other than that, I don't go past the 15-minute. I don't look at the 5-minute, 10-minute, 1 minute. All right, there's no reason to be looking. I look at the 15-minute just to look for a good entry. But I look at the hour, the 4 hour, and the daily. I mark up my charts on a bigger time frame. How do you set up those pivot points? I didn't catch it. That's an indicator that I paid for, that I have. So if you guys want it, I can make like a package deal with all my if I made a package deal with all my indicators and on trading on how to do it, would you guys want that? Just out of curiosity. You know, like, you know, I'm not, and guys, I'm not going to charge you what I paid for it, because you guys would be kind of crazy on like how much people charge for indicators. But really, guys, I just want to show you guys that it's possible to make money, really. That this is not a get rich quick scheme. But guys, this was just one webinar. Just imagine of how many webinars that you guys would gain from me. You know, if I did these couple times a week, I trade with you guys a couple times a week. You know, I feel like that would help you guys a lot. So guys, I think that's it. I think I've kind of gone over what I wanted to explain to you guys. Guys, this really was more of a psychological webinar. It wasn't really a Forex Basics 101. Guys, if you guys want to go on Forex Basics, you guys can look up Ocean Sky. You know, Reza's company is about to launch. I hope you guys are excited. You know, imagine just the content, guys. So when we learn from what we're gonna do, you know, when we learn from mentor tips and Kaizen, and like, guys, take that information and then, like, remember, then start doing the psychological part. So remember, now you know that most people are looking for a buy or a sell because of what I learned from Kaizen and the educational courses and the boot camps. But now you got to take a step back and start doing the mindset and the psychological part of it, and then decide if you want to trade. And guys, with my indicators, with my market profile, with pivot points, guys, I guarantee you'll make money. I promise you. That is the best way you can trade. It's all mental. It's all psychological. Don't trade with the 95%. Remember, there's one thing you need to take from this webinar. It's you versus them. The sad part is you need people to lose money so you can make money. So, you know, we need to come together, all right, and we need to put our heads together, and we need to be able to trade, outsmart the newbies, outsmart the people that aren't thinking with their brains, but they're thinking with their education. Because remember, I said education's a scam, all right? Education's a scam, because once they teach you, you're going to use that as for your entry. And then the market makers are going to use that against you, because they have the power to move the market, even though it hits support, even though it's at Fibonacci, even though it's at a pivot point, things like that. So, you know, please take from this that it's you versus them. And if you guys can take this knowledge with you guys will be successful traders, and you guys will be very profitable. Thank you guys for being on this call. I really appreciate it. We had about 80 callers on this. Guys, thank you so much. That means a lot to me. I will be doing more of these once we launch, for more of my private students. And if you guys want to be a part of that, just send me an inbox, and you know, we can talk about it, and we can just go from there. So guys, have a good day. It's called for about an hour, and you guys I hope you guys learned something from this, and you guys can use this for your trading profile and your trading strategies. Thank you guys. Y'all have a good one.